Alright, good morning guys. Today is Wednesday, April 30th, 2014. Todd asked me to fill in for him. He's on vacation. He'll be gone till next week. And for those of you who, some of you will recognize my voice, I'm Craig Hill, and I help Todd just about with everything, with a lot of things, putting PowerPoints together for the courses and whatnot, and kind of work together on a lot of things. So anyways, he's asked me to cover for him, so I'm going to step in and just quickly go over, kind of pick up where he left off. I know in yesterday's video he was talking about Google, and I just wanted to point some things out. So we'll just jump right into this. You know, if you look at Google back in was this October of last year, we had the gap up. The market consolidated in here, right in here, guys. See how the market consolidated, and look where we pulled back to a couple days ago, right back into this zone, and we got responsive buyers in here. And Todd talked about this on his video yesterday. If you went long in here and you bought calls in here, you've got your stop just below the low of that bullish blow-off bar. This could end up being a really good trade. What I'd be looking for in here is you've got, obviously you've got some support in here, okay, which is potentially becoming new resistance in here, okay. So what you're looking at here, the market may end up, market's got to break up through this minor resistance in here, and if we can do that today or tomorrow, then the market could end up pushing up into, you know, the mid to upper counter channel band. Your next major level would be right in here between 52 and 60. So you'd want to be looking to take profits, you know, below 550 in here, guys. Okay, anywhere mid to upper below that 550 level if you are long in there. And then if you start to get a move up in here, you could start to manage your trade up a little bit. Since you got this blow-off bar, you got a nice bullish bar right in here. Let me zoom in on that. You got a bullish bar in there. If we get that move up today, market's pulling back right now, but if we do get that move up, we break up through this should hold, and you could bring your stop up in here, and, you know, possibly stagger your stops, half the portion of the trade right there and half the portion right there. And obviously you'd be looking for that first profit objective, or even take out the entire trade up at this 550 level, somewhere in here, mid upper. Okay, and then for now, also, I just quickly wanted to go over, for those of you 1K day subscribers, I hope, you know, I've only seen a handful or so in the midweek discussion on Wednesdays. We have every Wednesday, and last Wednesday we briefly talked about the Qs, and I had brought up, this had popped up on my scan last Wednesday. Here is last Wednesday. Let me find my arrows here. Here we go. Was it this one? I think it was that one. No, that was the next day. That's right. That's right. It was this day here. That's because the next day, actually, you could have sold or actually taken on a bearish position and bought the June 88 puts for around $2.50, $2.48. Right around $2.50 as this market continued to pull back in here. But this is a great short right in here on this day, which is the next day, which was on Thursday, following our midweek discussion, Q&A discussion. We talked about this. This has popped up on my scan, and I said, hey guys, let's take a look at the Qs. It's pulled back into support. You know, you've got a lot of confluence in here. Let's draw the fibs. You've got, draw your fibs from the high down to this new low. And because nothing was coming up on my scans really for an uptrend, because everything had already moved up. So I went ahead and looked at my downtrend scans. I figured, well, if the market's already moved up, then maybe anything that's in a downtrend is now pulled back up into resistance in a downtrend. And the Qs actually popped up, and actually a nice setup in here. If you shorted around 248, right around these moving averages, you get the options price for around 248 for that 88 put. I can't remember the exact entry price, but I got in at 248 on the June 88 put, and took a portion off on this day right around 85.80, right around 85.80 for $3.42. So almost $1 on that put option, and we'll see if this market continues. I would expect this market to continue, potentially retest these lows. Okay, but you've got look at what's going on here. You've got a lot of confluence. You've got right between the 50 and 62% fibs. Okay, you've got the 50 EMA right there. You've got the 79. You've got the 89. So a lot of confluence in here for looking. These are the shorting opportunities that you want to take advantage of. Okay, you don't want to pass these up. And then what I like to do, and this is just a personal preference. I know Todd will look for that first entry from your entry price back down to the new low. I like to actually just take it off the swing. So right in here, that 50% is 85.75. So like I said, exiting that put at 85.80. Just shy, just before that. It was almost $1 on that. So 342. With an entry 248. So that was a good trade. Looking to see if we get some more follow through in here to the downside. So yeah, and again, guys, we talk about this. We briefly mentioned this last week in the 1K a day midweek discussion. So if you're not a 1K a day subscriber, definitely it's definitely worth looking into. Todd will go over swing trading ideas and more in depth and more swing trading ideas than he shares here on the free videos. And then also I will sometimes record video clips from the E-mini trading room, and I'll throw in there too. And then you'll have access to the E-mini trading room every Tuesday morning, and then also you can attend our midweek discussion where we look for other trading opportunities. And if you have any questions, if you have any other trading ideas, you can bring up on Wednesday. We'll take a look at those and go from there. So, all right, guys, I hope that helps, and we'll see you guys tomorrow. Have a great day.